Hello viewers, welcome to my channel. I am Hasham Ali Khan. In this video, I am going to take up a new accounting standard 13, accounting for investment. Last video, I have explained you completely regarding AS12, accounting for government grants. Hope my regular viewers are watching all the videos on different accounting standards. So if you have not watched the earlier videos, I suggest you go to the playlist of my channel, select the subject accounting standard, watch all the videos, be perfect on the provisions of accounting standards. And particularly these accounting standards are very helpful to those who are pursuing professional courses like CA or CMA or CS like that. Now, before starting the explanation of this AS13, take the screenshot of the points which I have written on the board. Then I'll explain all the points in detail. Now, see here, AS13, accounting for investments. That is the topic title of this accounting standard. Now, this standard deals with accounting for investment in the financial statement of an enterprise. How the investment should be shown in the financial statement of an enterprise. This is the main topic of this accounting standard. And AS13 does not deal with some points, with some incomes or other assets. Examples: basis for recognition of interest, dividend and rental income earned from investments. We will invest, the enterprise will invest in order to get some return in the form of interest or dividend or rental income or any other return on investments. So this AS13 is not, concerned about the treatment of interest or dividend or rental income or any other return on investments. Separate accounting standards are there for recognizing the return on investment. Secondly, operating and finance leases. A separate accounting standard is given for leases. So any operating or financial leases will not come under AS13. Similarly, investment for retirement benefit plans. Many people will make the investment in retirement benefit, like provident fund or insurance fund like that. So for investment in retirement benefit plans, again this AS13 is not concerned. Lastly, investment of mutual funds or venture capital or banks or financial institutions. That means investment made by mutual fund companies or venture capital or investment made by banks or financial institutions. To these categories also AS13 will not apply. So generally AS13 will be applied on investment made by any other enterprise in order to get the returns, and how to show the investment in the financial statements. That is the concern of this AS13. Now, investment. Before proceeding, we must know the meaning of the term investment. Investment are those assets of the enterprise for earning income by way of dividend or interest or rental income or for capital appreciation or for any other benefit of the enterprise. Simply, investment means any assets which are purchased by an organization in order to earn the interest or dividend or rental income or any other return or capital appreciation. So for these purposes, assets are purchased. Those assets purchased are called investments. So investments are classified into two categories. This AS13 has classified the investments into current investments and long-term investments. So what are current investments? The current investment is an investment that is by nature readily realizable and is intended to be held for not more than 1 year. Any asset which can easily be realizable, that means easily can be sold, and the intention of those investment are to be held for not more than 1 year. That means if the enterprise has purchased the investment with the intention that it will be held not more than 1 year. Within 1 year, we are going to realize in cash. We are going to sell the asset, sell the investment. So investment purchased to be held for not more than 1 year, and the investments are readily realizable into cash. So on which such investment is made. These are called current investment. Next is long-term investment. Any investment which is not a current investment is called long-term investment. That means an investment which cannot be easily, readily convertible into cash. And any investment which is held for more than 1 year, that is called long-term investment. Investment property. If it is an investment in land or building that is not intended to be occupied substantially for the use or in the operation of the investing enterprise. Any investment which is made in land or property which is not being used in the operations of the enterprise. That means simply land and building is purchased as an investment, and that land and building purchased is not being used in the operations of the business, then it is called investment property. Now, investment property is always treated as long-term investment. Next comes cost of investment. So what do you mean by cost of investment? The cost of investment means the purchase price of the investment and all subsequent expenses incurred in order to purchase that investment. So it comprises of purchase price and acquisition charges such as brokerage or fees and duties. Example, if the property is purchased for rupees 50 lakh, for purchasing the property 50 lakh, we have paid the brokerage, we have paid the registration fees, we have paid the duties. So all these are incidental expenses in order to acquire the property. It will be capitalized. The purchase price 50 lakh plus 5 lakh rupees, all expenses incurred. The cost will be 55 lakh. Then borrowing cost can be capitalized and included in cost of investment property. Borrowing cost. If investment is acquired by issue of shares or other securities, purchase price of investment is a fair value of the securities issued. Sometimes investments are purchased and in return shares are issued or any other securities are issued. In that case, we will find out what is the market value of those securities. That is the cost of the investment. If the investment is acquired in exchange of another asset, sometimes there will be exchange of assets. Then acquisition cost of the investment is the fair value of the asset given up or fair value of the asset acquired, whichever is clearly evident. The point says, whenever there is exchange of assets, then we find out what is the fair value of the asset given and the fair value of the asset taken up. Whichever is evident, that will be taken as the cost of investment. So these are the points given here to find out the cost of the investment. Now, carrying amount of investment, valuation of investment for the purpose of balance sheet. In balance sheet, investment will be shown as an asset. So AS 13 has given the explanation how to present, how to calculate the value of investment for the purpose of balance sheet. So first of all, current investments are carried at cost or realizable value, whichever is lower. When the business held the current investment, the investment which are readily converted into cash, or the investment which are held for not more than 1 year, those are called current investment. The current investment should be valued at cost or net realizable value, whichever is lower. That value should be shown in the balance sheet regarding current investment. Any reduction in realizable value is debited to P&L account. Suppose if the realizable value has decreased, then whatever loss is there on the investment, that will be charged to profit and loss account. And any subsequent increase up to the cost of investment is credited to profit and loss account. Suppose the realizable value have increased over cost, then whatever increase in the realizable value, that will be credited to profit and loss account. Then long-term investment carried at cost, less any decline in the value of investment which is not temporary. The decline in value is charged to P&L account. See here, for long-term investment, the value of the investment should be taken at cost. And if there is any permanent decline in the value of investment, then only it should be considered. If it is only temporary decline in the value of investment, should not be considered. Example, there is a long-term investment of rupees 50 lakh, that is the cost. 50 lakh is the cost. And the enterprise and the organization thinks that there is a continuously, permanently decline in the value of the investment by 5 lakh. So this 5 lakh rupees will be deducted. 50 lakh minus 5 lakh, 45 lakh will be shown in the balance sheet. Otherwise, 50 lakh rupees is the cost of long-term investment and 5 lakh rupees is the decline which is temporary, which is not permanent. So don't deduct 5 lakh, show the investment at 50 lakh. The only thing, long-term investment should be shown at cost. Current investment should be shown at cost or net realizable value, whichever is lower. That's it. Right? Now, right shares. Right shares are those shares which are offered by a company to its existing shareholders. Already you are an existing shareholder. Now the company is issuing new shares. So according to the provisions of the Companies Act, the new shares must be offered to the existing shareholders. Now existing shareholders will have the right to subscribe for the new shares. That is called right shares. Now in right shares, the shareholder can exercise the right and purchase the shares, or the shareholder can sell away the right to any other person. The right shares can be purchased or the rights can be sold. So in both cases, how to calculate the value of the investment? Here the AS13 has shown. If right shares offered are subscribed, then the cost of the right shares should be added to the carrying amount of investment. Already the enterprise is having the investment of 1 lakh. Now they have purchased the right shares for 20,000. So this 20,000 will be added. 1 lakh plus 20,000. 1 lakh 20,000 is the cost of the investment shown in the balance sheet. Now, if right shares are not subscribed and the rights are sold, then the sale proceeds are credited to profit and loss account. If the right shares are not subscribed but the right are sold to any other person, then whatever amount received from the sale of right, that amount will be credited to profit and loss account. This is regarding right shares. Now fair value of investment. While calculating this current investment, it is given that it should be valued at cost or net realizable value, whichever is lower. So you must know what is the fair value. Fair value. So it is the amount for which an asset could be exchanged. Fair value means the amount at which an asset will be exchanged between two willing parties. Between two willing parties in an arm's length transaction. That means the transaction is on hand and both the parties are willing to exchange the asset. The value of that asset will be called fair value. Now, under appropriate circumstances, market value or net realizable value provides an evidence of fair value. So normally, in order to find out the fair value, normally net realizable value or market value will provide the evidence to calculate the fair value. Now, market value. The market value of an investment is the amount obtainable from the sale of an asset in an open market, reduced by the expenses necessary to be incurred for sale. So market value means the value at which the asset will be sold in the market minus any expenses required to be incurred to sell the asset. Example, suppose my property is there. The market value of the property is 50 lakh. That means if I sell the property in the open market, anybody will purchase it at 50 lakh. That is the market value. But in order to sell that property, I have to incur some expenses like brokerage or commission to agent. Suppose if 5 lakh rupees I have to pay as expenses, then that 5 lakh rupees will be deducted. then the market value will not be 50 lakh. 50 lakh minus 5 lakh, 45 lakh rupees is the market value. Next is disposal of investment. Disposal means sale of investment. On the disposal of an investment, the difference between the carrying amount and the net disposal proceeds is recognized as profit and loss account. So whenever an investment is sold, disposed of, any difference between the carrying amount and the sale proceed, that difference is either profit or loss, and that will be recognized in the profit and loss account. Example, the property, the book value, the carrying value of the property is, let it be 50 lakh, and we have sold the property for 60 lakh. So 60 lakh sale proceed, 50 lakh rupees carrying value. So 60 minus 50, 10 lakh rupees will be recognized as profit. It will be taken in profit and loss. Otherwise, if the carrying value is 60 lakh, but the sale proceed is 50 lakh, we have sold the property for 50 lakh, 10 lakh rupees loss. That loss should be charged to profit and loss account. Now disclosure. Finally, according to AS 13, what are the disclosure requirement for investment? First, the accounting policy for determining the carrying amount of investment. So every business have to adopt a policy of valuing the investment. The policy should be disclosed in the financial statement. Which accounting policy is adopted in order to calculate the value of investment? Secondly, classification of investment into current and long-term investment. The disclosure should be given regarding which are the current investment and which are the long-term investment. Thirdly, amounts included in profit and loss statement. What are the amounts to be included in profit and loss statement? First one, interest, dividend and rental on investment in long-term and current investment. First of all, in the profit and loss account, it is required to be disclosed how much interest is received, how much dividend is received, how much a rental income is received. That should be taken in profit and loss account. And profit and loss on disposal of long-term and current investment. Any profit or loss on disposal of current and long-term investment should be disclosed in the profit and loss account. Thirdly, gross income should be stated, amount of TDS to be included in an advance tax paid. Suppose if the net amount is received, we have to make it gross by adding back the TDS, tax deducted at source. That means net amount received plus TDS is equal to gross amount. So in the profit and loss account, we should take the gross amount. TDS should be separately shown as an advance tax in the balance sheet. Now, aggregate amount of quoted and unquoted investment giving the aggregate market value of quoted investments. So separately disclosure should be made regarding which are the quoted investments and which are the unquoted investments. For quoted investments, what is the market value of investment? That should also be disclosed. Lastly, other disclosures are required by relevant statutes. If different statutes require separate disclosure regarding investment, so those disclosures should also be given. So these are the disclosure requirement. Note, shares, debentures and other securities held as stock in trade cannot be considered as investment. Some enterprises will keep the shares, debentures or other securities as stock in trade. So when these items are treated as stock in trade, then it should not be treated as investment. That point you have to remember. Now, important points regarding this AS 13. The first important point, investments are classified into current and non-current investment. First of all, this AS 13 says in the financial statements, current and non-current investments should be separately shown. Secondly, current investments are carried in the balance sheet at cost or fair value, whichever is lower. Second very important point of this AS 13 is the current investment should be valued at the lower of cost or net realizable value. Whichever is lower, cost or net realizable value, whichever is lower should be considered in the financial statements. Now, non-current investments. Non-current investment means long-term investments. The long-term investments are carried at cost, reduced by any permanent reduction in the value of such assets. So, for long-term or non-current investments, it should be valued at cost only. But if there is a permanent decline in the value of investment, then only it should be reduced. If it's only a temporary decline in the value of investment, should not be deducted. It should be taken at cost only. Then profit or loss on sale of assets should be charged to profit and loss account. If any profit or any loss arising on disposal of investment, that profit or loss should be considered in profit and loss account. Then interest, dividend on rental income from investment are recognized as revenue in P&L account. So whatever return we are getting, interest is received, dividend is received, or rental income is received, or any other benefit received from investment should be taken in the profit and loss account as other income. Then all expenses incurred to acquire the investment such as brokerage etc. are added to the cost of investment. Again, one more point is given in AS 13. Any brokerage or any commission or any duties are paid for purchasing the investment. This should be added to the cost of the investments. That's it. So these are the points you have to remember regarding AS 13, accounting for investment. Inshallah, we'll take up the next accounting standard in the next video.